Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Monday. It's December 11th. It's about 7:27. The market's not going to open up for another 2 hours and 3 minutes. Couldn't sleep this morning. Too excited about my new commodity broker. Got to become an affiliate. You might have heard of them before. Here's their full name. They're in the yellow pages. You may want to check them out. You could find them online. Highly recommend them if you know what I'm talking about. They'll get you really good prices on pork bellies and orange juice. Oh yeah, it's like that. Anyhow, let's get into today's session. So you could see here, the S&P is down about 1.5. Nasdaq is down about 16 points. The Dow is flat. The market is looking for a catalyst. And boy, oh boy, we've got catalysts this week. So tomorrow we've got FOMC beginning, and then you have CPI report. This is probably the biggest, if not the second biggest report, aside from GDP and jobless claims that the Fed looks at, and this will tell us whether inflation is going higher or not. And you guys know the routine. We look at the core value, and we're looking for this number to decline. We're looking for, on an annual basis, the full year, and we're looking at core. This is what the Fed looks at right here, the core. And I can assure you they will be looking at this very, very closely tomorrow. Let's just highlight that if we can. So they're looking for any number. Now, as long as it's below 4, it'll be good. They could say, hey, what we're doing is working, especially on the year-to-year. But we want these numbers. We want this to be below 3.2, and we want this to be below 4. Anything below 3.2 is great. Anything below 4 is great. It means what they're doing is lower, and it's going to kick interest rate rises. It's going to kick the fact that they may have to lower rates, raise rates down the road. And more into the possibility of lowering rates, which I do not believe will happen. Sorry if I confused you. But the lower the number, the further they will push hiking or doing anything with rates down, and they'll be in wait-and-see mode. Now, here's the problem. If this number gets higher, if this number gets to, say, 4.1, 4.2, and this is 3.3, they're in deep doo-doo because now they're going to have to backtrack. Have you ever seen the Fed backtrack? It's not a pretty picture. So, again, that'll be tomorrow. Keep your eye on the bond market. As I mentioned, the bond market got really excited over here because the bond market's pricing in a March rate cut. It was priced in at about 51% on Friday. I said that anybody who thinks that the Fed is going to lower rates in March must be on crack. I'm going to record this and play it on an audio loop and a video loop 24/7 till people get it. I think that's just insane. And as a result, the bond market's now backing off. And just so you know, the odds after Friday shifted from 51% or above 50%. Don't quote me on 51, but it was over 50 to now 40%. And I'm expecting this number to continue moving down and down and down. And that should be able to take a little bite out of this bond market. But remember, if we take a bite out of the bond market, it can also take a rate out of interest rate sensitive stocks like technology, like real estate, like home builders. Oh, yeah, like all the stocks that have been rallying lately. So that's a big, big problem. We'll talk about that in a minute. But right now, notice bonds are lower. This is going to be the third day they're closing lower. If they do, in fact, close here today. I don't know if that'll be the case. But and also, remember, today's not a big day. Today's a day where we prepare for everything. You've got CPI and you've got press conference, PPI, and you got FOMC. So today's going to be a very subdued day because we've got big reports, and hedge funds, large institutions do not like to position themselves ahead of big reports because there's going to be a lot of volatility tomorrow and the bond market is moving. Now, earnings. You've got Oracle today. Believe it or not, I don't know. Oracle used to be one of the most popular trading companies in the 90s. Now no one talks about it anymore. It's one of the biggest networking company. Tuesday, you've got nothing. Wednesday, you've got Adobe. Big tech company. That's pretty much it. Thursday, you've got Costco. And I made sure that you got this yesterday in your Telegram, and I'll make sure you get it emailed, but you should have this in your Telegram. And Friday, you have Darden. So we don't have a lot of earnings, but the earnings that we have are substantial. Like Adobe's one of the biggest tech stocks. That's going to impact software. That's Microsoft. Microsoft is one of the top 3 stocks in the world, or 4 stocks in the world. So this is a big report. Or how about Costco? You think Costco will have an impact on consumer retail stocks? What do you think? And consumer discretionary and consumer staples. And then you've got Darden restaurants. Folks have been going out. They've been spending money. This is important. So, and you've got Leonard Homes as well, one of the biggest home builders in the world. So you don't have a lot of reports, but you've got important reports. Looking at the SPY technically, I'm loving how it's looking. It's hugging the 8-day EMA. The odds are today it's going to come back down to the base. It's not going to break out because there's no major catalyst. I don't think it's gonna see a follow through from Friday, but we may just go a little bit higher, trick a couple of buy stops out right here, and then start coming right back down. But I think because today is a non-important day, there's nothing really going on. There's a lot of repositioning I think will happen today. I don't think we're going to see a lot of volatility. We may see some volume. We started getting volume last week, a little bit of volume last week, but you could see Friday and let's see here, Thursday, Wednesday, Tuesday, Monday. Fridays have been really volatile. Look at that. That's Friday before, and that's last Friday. And if you look at the QQQ, you will see that the QQQ has a very similar type of trajectory. Looking at the Dow, we got to look at the Dow. It'll be interesting to see if blue chips or tech controls. The Dow is breaking out. So blue chips are leading. Interest rate sensitive and tech stocks are pausing. It'll be really interesting to see what happens. Now, already talked about the week ahead, already talked about earnings. Let's talk about global economy, and then I'll talk about sectors. And I'll give you levels as well. So markets participant braced for a release of U.S. inflation data, CPI, PPI, looking ahead to Federal Reserve last Monetary Policy Committee meeting of the year due later in the week. S&P rising to a 4.5-month high, blue chips rising almost to a 2-year high. Look at this, 1 3/4, and Nasdaq 1-week high. What are you going to do? But you could very clearly see that the QQQ is lagging behind the Dow and the S&P, which has 20% of the QQQ, or the full Nasdaq 100, the big QQQ stocks. It's also lagging behind the Dow. Blue chips are leading. Labor Department reported on Friday that non-farm payroll rose by almost 200,000, higher than the consensus of 180,000, and accelerating from the 150,000 reading in October. The November unemployment rate fell to a 4-month low of 3.7%, which is what gave us the rally on Friday. University of Michigan consumer sentiment rose to a 4-month high, stronger than the expectation of 69.4. So consumer sentiment is high. Unemployment is getting tighter. Employment is getting tighter. That's one of the reasons why the market rallied. Now, remember, we're going to start lowering rates in March. No, you're not. No, you're not. You may keep raising rates in March, but you sure as heck ain't going to be lowering rates in March. The probability already dropped from 50-something% to 40.2%. I'm expecting this to come back to reality. I think that anyone who thinks that Fed is going to cut rates in March is smoking something really good. And I need some of it because this is crazy. This is insane. CPI is coming out this week, PPI. Fed speaking, you've got Adobe, Costco, and Oracle, as I mentioned already. Europe is giving us very minor tailwind. Interest rate sensitive week for Europe. I don't go deep into global economy. It's just not necessary. It's not going to help us all that much. We need to know if they're giving us tailwind or if they're giving us a lot of headaches and the kind of implications it'll have on our volatility. But in terms of using China or using U.S. for a non-event, it just doesn't have anything. We need to see something juicy happening. And then it will be impactful. But you'll be able to see it on the reflected on the overnight price. And right now, you could see right here, this is randomness. So there's very little, even if something sounds juicy, you could tell by the overnight action, nothing happened. China erased early losses to end higher, accompanied by spike in volume for an exchange-traded fund that tracks state-owned shares, prompting speculation about potential purchase by state funds. Japan closed higher today, tracking Wall Street gains on Fridays. Optimism grew about the soft landing for the U.S. economy. This is while the bond market, they're talking soft landing. The bond market's expecting us to go lower on rates in March. Does that sound odd to you? The soft landing and lowering rates in March sound like two things that do you see how crazy, how out of whack things are? They're talking about calming things down, and U.S. is talking about lowering rates. I don't know. I don't get it. Maybe I'm crazy. Macy's had good numbers. They got upgraded, which is really good. Cigna got upgraded. Healthcare stock, that's really good. Nike got upgraded. This is really good. It's giving us a little bit of tailwind today. Now, looking at the broad market, as I mentioned, I think we're going to either have an inside day or a choppy day or maybe come up a little bit, tease us a little bit, get some buy stops in, some momentum traders get in, and then it'll start coming back down. I don't think today's going to be a big day. Although if the sentiment from Friday continues, which I don't think it will, we may see some follow through. But my experience, typically on major days before huge announcements, the market is subdued on lower volume. And on Mondays, we have kind of seen lower volume lately. We haven't seen the market really get it together on Mondays. It takes later in the week, and we've got a lot of caution right now. Now, looking at stocks that are moving, you're not going to see anything different. Look, 6 weeks ago, home builders, semiconductors, consumer discretionary, technology. Speculative, very, very speculative. 3 weeks ago, home builders, Russell 2000, real estate, mid-caps, consumer discretionary. Now tech is starting to go down. What about the last 5 days? Well, home builders, consumer discretionary, semiconductors, communication, they're starting to come back. That's really, really good. So if they're starting to come back, that means speculative sectors are going to start rocking and rolling at the expense of more conservative healthcare and consumer staples, those type of sectors. Well, if that's the case, that's very, very bullish for the economy. So the question is, are we going to get another run-up in speculative stocks, or is it just going to be a one of those we're gonna rock and roll till we stop you out kind of a deal, and then going lower? We will see. But technology, interest rate sensitive stocks are moving up again. Now, I find that really interesting, really, really interesting in light of the fact that bonds are down already 3 days in a row, which is the worst thing for these type of stocks right here. And the fact that the Fed is now pricing into the bond market based on the fact that it went down, only a 40% probability of a 25 basis point rate hike. So again, you got to take this with a grain of salt. Now, I'll tell you what I think. I personally think, and maybe I'm wrong, I don't want to be wrong, but I think this is just a show, and I think we're going to go back to this type of an environment where we have home builders, retail, financial, healthcare, basic material, Dow at the top. So again, we'll see. But remember, this is only the last 5 days. And if you were to look at the average, you would see that things are really mixed up right now. So it'll be interesting to see if technology is going to lead, or if consumers going to lead, or if blue chips is going to lead. Start looking at the Dow versus the SPY versus the QQQ as the day goes on, and you'll start seeing where the strength is. Like right now, QQQ is down 0.12. The Dow right now is up 0.2. So right now, and the Dow's making new highs. The Nasdaq is not. The S&P is not, because it has so much of the Nasdaq in it. So again, remember, the S&P 500 has all of the QQQ, the large cap Nasdaq stocks in it. So again, I would still be focused on blue chips. I wouldn't, and also large cap tech stocks like Apple, like IBM, those type of stocks will move because that's where the market cap, they are all in the large, every blue chip fund has Apple, IBM, you understand what I'm saying, the big tier stocks. NVIDIA. But as far as second tier stocks or slightly smaller stocks that are not considered mega leaders, I would be careful right now with them because the interest rate announcement could really screw the pooch. So I would be very, very careful, and I would follow stocks today that have really strong relative strength in comparison to the market. Now, what are the stocks that I'm looking at right now? Let me show you what I'm looking at. Let me show you what looks good right now. Para looks really good. Paramount looks really, really good right now. ARM looks really good right now. Bitcoin ETF looks really good right now. Citibank looks really good right now. I could go on and on, but I think that you get the point. On the downside, Walmart, and YUMC. Those stocks look horrible. Now, folks, before I let you go, and by the way, make sure to subscribe to my Telegram channel. Make sure to subscribe to my YouTube channel. Go to YouTube and then go to Roger-Scott. Roger-Scott in the search box. You'll find it. Below the video in the YouTube channel, you'll find a link to my VIP room that happens at noon today. You will find a link to my morning videos, and you'll find a link to my Telegram channel. If you don't know about my Telegram channel, you are missing out big. I mean that. Now, before I let you guys go, get ready, folks. 1 p.m. today, Graham Lindman, and I, we're unveiling the top on-the-clock stock, including the exact dates it climbs each year. Yes. You heard it right. We're rolling out some of our choicest on-the-clock stocks just for you. And guess what? It's not going to cost you anything. Curious about what the on-the-clock stocks are? These are tickers that have consistently delivered payouts on the same dates over a decade like clockwork. Yes, I can't wait for you guys to learn this. Now, we can't guarantee future returns or safeguard against losses. You got to put on your big boy, big girl pants. But by joining us, you'll get our hand-picked ticker and the key dates for each month when it typically soars, all as a thank you for attending. Don't wait. Click the link below and secure your spot for our 1 p.m. Monday session, and I'll talk to you guys soon. Bye. And by the way, don't forget, check out this broker. They are very solid. They're very stable. They've never had any shenanigans. You could look them up online. They're very, very solid. I've become an affiliate, and I think I'm going to become the senior manager soon. Wink, wink. By the way, Clyde recommended them to me, just so you know. I'll talk to you guys later. Bye. Have a great week ahead.